Welcome, everyone. My name is Dave. I work for the Eco Foundation, not-for-profit organization that acts as a custodian for the growth of the Eco protocol. Welcome to Stable Stories, episode number 3 with Yellow Card. This one I'm really excited about. Stable Stories is all about founders that are building at the bleeding edge of stablecoins, and I can't think of a better project to represent that. Yellow Card has been building real-world use cases on the ground since 2018 in Africa, and I'm really excited to get to know everybody. So welcome, Jason and Justin. Justin Poiroux, I hope I pronounced that correctly, forgive me if I didn't, is one of the co-founders of Yellow Card, and Jason is their COO. So thank you both, guys, for taking time out of your schedule to join us and talk stablecoins today. How's it going?
Yeah, happy to be here. Thanks for setting this up, Dave. Things are going well. Can't complain on my end. Excited to talk stablecoins.
Nice. Me as well. Cool. So format of the show is fairly straightforward, really simple. First 10, 15 minutes, general stablecoin talk, get a bit of perspective on your history in the space. And then, the last 15 to 20 minutes, we will do a bit of a deep dive into Yellow Card and get some context on what you guys are building. So if you're good, I'm cool to just jump right in.
Let's do it.
Nice. Okay, so first stablecoin question that we started asking all of the guests at the beginning. First stablecoin experience, when was it? Do you remember it? What was your experience? How did it go?
Yeah, so a little bit of context. I've been in the crypto space since 2012 or so, and I remember very vividly when the initial white paper for, I believe it was Mastercoin at the time, came out. And so I've been following, the path of stablecoins for quite some time, going through all of the, the initial white paper into the several development cycles, going from, Realcoin, Mastercoin, Omni, and then the expansion of, more and more stablecoins. So it's been, a bit of a journey. And I think for me, I don't specifically remember the first time I ever used stablecoins, but I remember when it clicked for me. Several, call it 6 or 7 years ago, I was what we would now consider, a Bitcoin maxi at the time. I was all heads over heel about Bitcoin. And as we were starting Yellow Card, I remember the same reasons why we started Yellow Card that we were saying, Bitcoin can help solve this. It truly clicked to me when stablecoins started getting more and more popular. Whereas I was like, wow, okay, crypto can be complicated for a lot of individuals and institutions, particularly Bitcoin. And here is this new technology that kind of essentially helps link up the existing financial systems with the new wave of crypto. And I remember that time being like, okay, the original mission that we set out to solve with Yellow Card, really comes to fruition when it comes to the usage and the utility of stablecoins for businesses operating across emerging markets. So to answer your question, I don't remember the exact first time I used it, but I remember my mental journey as the development, took place over the last, call it decade.
Yeah, I'll definitely take that one. Yeah, thanks for that context. Jason, what about you?
Yeah, I remember clearly because it was personal. I was traveling to Nigeria. I think this was early 2021. We have over 80 employees in Nigeria. It's where we started. Some key members of our teams, including senior leadership. And I wanted to get a local Nigerian suit, called a senator suit. So Nigerian local clothing is kind of famous. It's quite colorful. It's really weather appropriate also. So I wanted to get my own. And one of my local coworkers was buying it, and I needed to send them money. And so I was going to send them Bitcoin, but at the time Bitcoin was up and down. It was being very volatile. So they suggested I send them USDT. And I said, just out of curiosity, I have the Western Union app. Why don't I just send Western Union? And they explained if I sent them a Western Union, they would have to drive an hour in traffic because traffic's pretty bad in Lagos, one of the biggest cities in the world. And they would have to wait 4 or 5 hours in a bank lobby to pick up the Western Union and then drive an hour back home. And the FX rate they would get would cost us 10, 15% in just FX losses, plus the Western Union fees. So I said, just send me stable coins and I can have that in my bank account and the whole thing is paid and done. The tailor's paid. All this will happen in 10 minutes. So I use stable coins because I was told to. by someone in Nigeria who knew that was the best way to facilitate a transaction.
That's amazing. And actually, I really appreciate the juxtaposition between an incredibly old school, shout out to the Mastercoin reference, by the way, old school philosophical alignment with the idea of stablecoins, and a very practical, real world example of how it just worked better than what was available, or the options that were available to you at the time. It's kind of like the confluence of those two ideas coming together perfectly, right? Nice. That's sort of like maybe brings us like to the next thing that I wanted to ask about from your guys' perspective, very broadly. What is the most challenging part, if there's just one that you could point out, that you've experienced in bringing stablecoins to market?
Jason, you want to take that? Just
Yeah,
FYI,
sure.
Jason leads our product development. So take it away,
Amazing.
Jason.
Perfect person for it.
To be honest, one of the most challenging things we have in Africa is keeping up with demand. It's like a grocery store that can't keep the shelves stocked. The growth in the whole market and our growth personally just kind of strains everything, which is a good problem to have. The other challenge is our biggest competitor in Africa is not any company, it's the informal market. So every use case we solve with stablecoins is not just being addressed by Yellow Card, but it's being addressed by small players with WhatsApp groups and Telegram groups, or some well-meaning and hardworking but underfunded local companies that uh, may or may not follow all the strictest legal and compliance obligations that are out there. And because of a lack of regulation, we have to compete every day with people who break the rules. And that's challenging, right? We have to educate the market of, hey, there's risk there that you don't realize when you're working with somebody who's playing cowboy. That gets addressed, and it's being addressed bit by bit and country by country as they put in regulatory regimes. It makes it easier for the customers to see, oh, Yellow Card has a license. These guys don't. But where licenses don't exist and where regulations don't exist, it becomes really tough to compete with the underground market.
That makes a ton of sense. And when you say you're competing with these less regulated informal groups, are they typically using stablecoins for exchange as well, or are they using fiat or some other mechanism?
It's always stablecoins.
It's always stablecoin.
The fastest growing way to send money across borders for an African business or consumers is stablecoins by far. And everyone who's in that business is growing just because it's cheaper and faster and simpler.
Amazing. Very cool. I feel like we've waded into this a little bit, but I really wanted to zoom out a little bit before we get too into the weeds on specifics. Could you tell us the 30,000 foot view? What is Yellow Card? What's it doing? What problem it's solving? I think most people know, but for anyone that's watching this later that might not.
Go ahead, Justin.
Yeah, sure. So Yellow Card is a fintech that is focused on building out stablecoin infrastructure for emerging markets. So we help businesses, individuals, across the emerging markets be able to access stable coins, be able to make payments, collect payments, really building out a suite of stablecoin powered tooling to be able to manage their businesses and, day-to-day payments, and really kind of grow their offerings and make use of stablecoin under the hood. And so we've been powering a lot of businesses expansion into Africa, or companies that are operating across Africa and need to be able to make easy payments, making use of stable coins.
Awesome. Thank you for that. And then in terms of like your main customer base, businesses that you typically serve, what are the main driving factors that are bringing them to Yellow Card in the first place, to stablecoins generally in this space?
Yeah, I'll take that.
Go for it.
So I spent about 100 days last year traveling around Africa, a lot of that working with our local team, and meeting with clients. And as a product guy, I think of the problem first. So if you're a wholesaler in Senegal and you are paying suppliers in China, that end-to-end process can take days to weeks, and it's expensive. Or China, France, whatever. So to some corridors, we can make that payment happen with all the verification checks and stuff we do in an hour or less, overnight if there's a time zone issue with China. And So not only did we save money, but we've had clients say, since using us, we've reduced their working capital requirements because they have much less money in transit. We have other companies. There was a company in a manufacturer based in Kenya that was trying to expand to Nigeria. Now, the Nigerian naira, the local currency, is one of the most volatile in the world in the last 5 years. So they can't expand their manufacturing to Nigeria unless and until they can manage the FX risk. Using us, what they're able to do is, on a daily basis, if they want, give us their local naira. We convert that to stable coins. They're out of the FX risk business. They can be manufacturers again. So because of Yellow Card, they're actually able to expand their business across borders in a way they couldn't if they had to rely on the legacy financial system. So a lot of the companies we're dealing with now, they're not crypto natives. We're far from it. Even the larger ones with really talented and highly educated CFOs and treasurers, but they're learning it. Not because they want to, they don't really care about the inner workings of the technology, but they don't have a choice. They have to find a better solution, or they can't expand, or they can't stay in business. We've had countries that had severe dollar shortages, and they had the money, and they went to the bank to pay a foreign supplier, and the bank can't help them because there's a dollar shortage in the entire country. So we've seen companies go out of business and lay off thousands of workers because they can't make a payment across borders because of the limitations of banking systems in some of these African countries. So they're coming to stablecoins to survive. And I think that's something that over the last few years has only grown, because when people have to find a better solution, if there's one out there, they'll find it. And if we do our job, they'll find us.
Yeah, I
That
think
makes
that.
sense. Oh, sorry, go ahead.
Yeah, to summarize a little bit, like what we have really seen is that stable coins are becoming essentially the interoperability layer for institutions to be able, or businesses or individuals to be able to essentially speak the same language financially, right? Like Jason was saying, we work with many companies, including food processors, fashion companies, fintechs, you name it. And if they're trying to make payments, or in other countries, there's a decent to high chance that the recipient doesn't want the local fiat. They want US dollar. And so stablecoins become essentially an extension or a proxy where US dollar is currently being used, for international payments. But like Jason was saying, businesses struggle to acquire it, to actually, as well as banks, struggle to acquire it to be able to facilitate these payments. And so stablecoin is essentially a new kind of lifeline for these businesses and individuals to be able to access US dollar and similar financial instrumentation.
That makes a ton of sense. I've had this working thesis for quite some time, and it seems to be playing out that groups of markets where people are turning to stable coins as a function of necessity, whether it's currency debasement, unclear regulations, or fractured financial systems, the selling features of what stablecoins can enable are fairly self-evident. And those are the markets that seem to be adopting at a rate that is much higher than marketplaces where things kind of just work, right? And it's really interesting to see those massive headwinds in those marketplaces kind of turned into tailwinds. And now that those economies are already comfortable with mobile payments, with stablecoin usage, it's actually, like, to me at least, it seems like a massive advantage. Maybe one of you could comment on whether I'm sort of on the right track or totally off, or if there's some nuance there.
No, I mean,
No, I think.
Go ahead.
Yeah, I think you're.
Oh, my apologies.
No worries. I think you're totally correct. I mean, you have across the emerging markets, and particularly in Africa, you have such a tech savvy, base. And what we are seeing is that the utility is driving adoption. And, that's reflected in the fact that sub-Saharan Africa is one of the global leaders in terms of stablecoin adoption. And you have Nigeria being #1 in the world for, adoption of crypto in general. People are using it for real life use cases. So, I think you're 100% correct.
Yeah, I was just saying, necessity drives innovation, right? There is amazing tech in fintech in Africa. The domestic payment systems in a number of African countries are superior than that of the United States. and have been for over a decade, because they had domestic problems to solve in the legacy systems that didn't work, right? The card-based system we have in the US that just didn't work and didn't solve the local needs, right? So they built their own systems, whether it's mobile money or instant EFT bank transfers or what have you. But the cross-border system is not something that that an individual company or group of companies in Africa can solve using the legacy systems. If I send money from a bank in country A to Africa to country B to Africa, that transaction hops through a correspondent bank in London, New York, or both. And that's extra mouths to feed and delays and lags, right? And no African would have designed that system. That system wasn't designed for Africa. It was designed for people in New York and London. And so, Africa suffers from the way the legacy infrastructure was built because it wasn't built for them. Where stablecoins is a more neutral playing field and a more neutral technology that everyone can access, as long as they have some tools like the types that we're trying to provide.
Makes total sense. And actually, I wanted to touch on, you mentioned regulation, and I just wanted to get your guys' insights, because I think you probably have the best perspective of the regulatory landscape in Africa right now. Like, are you finding legacy institutions more amenable to integrating and interacting with stablecoins now? Is it about the same as when you started, or what's been the genesis of that?
Yeah, I'll take that. I would say throughout the continent, most countries were pretty far behind till a couple of years ago. And now there's a regulatory dam kind of breaking. So there's full licensing regimes in South Africa and Botswana and Mauritius and Namibia. There's a number of other countries. So we've been in a regulatory sandbox, which is like an incubation system with the central bank. So they can study and learn it. We've been in a regulatory sandbox environment in Zambia. We expect to be in regulatory sandbox environment in Tanzania soon and in Nigeria soon. There's legislation to create regulatory regimes in Tanzania and Kenya and on. So it's not even. Africa is not a country; it's a diverse continent. But there's a regulatory momentum. All the central bankers and SEC commissioners, they know each other, they work together, they watch each other, and we kind of feel like it's a snowball running down a hill, which we're happy about. We've been engaging these regulators for years. We see them learning and understanding and asking better questions year after year. I was at a central bank a few months ago, and they said, look, we know it's here. We know it's here in the formal market and the informal market. We need to understand it, and we need to put some kind of even rules and have some visibility into what's happening. Can you work with us to help understand it and craft these regulations? And so we're optimistic in most markets. There will always be a couple markets that lag, but we're pretty optimistic overall.
Amazing. Another good problem to have: too much demand and everyone coming around to stable coins. That's fantastic. Which kind of leads well into the next thing that I really wanted your guys' take on. Like I mentioned earlier, Yellow Card's been around since 2018, and I've been following you guys on and off pretty much that entire time from the first time I heard about you. And one of the things that I really respect about what you're doing is the boots on the ground effort. You guys have been physically in African markets advocating for crypto, trying to make people's lives better, fixing problems that exist. And I hear ad nauseum at conferences and from people in crypto that go where users are. We need to build products for users, and you guys have been doing it at times low key, at times more outward facing. But what do we need to be doing better or different in the space more generally to start engaging with people either in Africa or beyond, and really building these products out so that we can actually meet users where they are, like you guys and a very small handful, unfortunately, of other projects in crypto are doing?
Yeah, I think that's a great question. And actually, this point that you're raising is one of the catalysts that actually made us really start Yellow Card originally. Back in 2015, there was a common sentiment across the industry where people would kind of just say, oh, don't worry, Bitcoin will fix this, Bitcoin will fix that. And from our perspective, back in 2015, it was a lot of talk without much walk. And, I think that what we have seen is that there has been a higher degree of companies and institutions, actually trying to get closer to, where the problem is. And for us, our approach to that is, initially when Chris and I started Yellow Card, we met a Nigerian professor at our university in the US. And he was sending $500 back or $350 back home to his family in Lagos every month. And they were charging him a $90 international wire fee. And, we taught him about Bitcoin at the time. And then later we were thinking, yeah, we can help this man transfer this store of value from, Alabama in the US to Lagos, Nigeria. But how does that family extract, that end value and actually get that buying power from it? And so, we hopped on a plane, we went to Nigeria, we began to understand the market conditions there. And since then, we've built up a team that is 98% African. We have, almost all of my engineers that I have are based on the continent, actually building the products and the solutions for challenges that they face on a day-to-day basis. And so I think, building locally where you're actually trying to solve the problem is a pretty big kind of gap for some companies and protocols. And I think that the closer you are to experiencing the problem, the more elegant the solution will be.
I think for the industry, the next step we need to take is, Justin and I are happy to be on this, but we have some really talented members of our leadership team on the African continent, from across the continent. We need to have their voices on these forums. I mean, maybe have to change the time of day a little bit. And I think we need to have more voices from where it's happening on forums like this. And then those of us who want to be experts in the system, we need to get on a plane, and we need to fly to Kenya, to Senegal, to South Africa, to Nigeria, and see it for ourselves. There's some great conferences and events. We need to attend those. We always expect Africa to come to us, and there's a certain, I don't know why that happens, but if we want to be in this space and we need to go see where the innovation is happening and where the real use cases are, and they're not in the US, right? They're in Argentina, they're in Nigeria, they're in India, right? And it's time to get our passports out.
I could not agree with that more. Yeah, very well said, guys. Thank you. I know we've only got a couple of minutes left. I've got a few more questions I'd love to go over if you guys have 5 more minutes. If not, we can do a hard stop at half past.
Sure.
That's no problem.
We're good.
Awesome. Thanks. This one might be a little stupid. Maybe I don't have enough context, but how are you guys thinking about the last mile problem? Is it we need better like banking relationships and off ramps and connectors at that final mile, or is the dream here? And I think the dream is that it all stays internal and stablecoin payments just become something more ubiquitous, and there's much less need to off ramp. But how are you currently solving for that?
Gonna take that, Jason?
Sure. We are the last mile. That's the core, one of our core value props.
Okay, awesome. Right? Yeah.
It's just like, if you should be able to you should be able to go from one fiat currency to stable coins, and that person should be able to keep it in stable coins, or they should be able to off ramp into their fiat currency in the local relevant payment method that the end user prefers, whether it's a bank account, a mobile money wallet, and it should be seamless back and forth. I should be able to go from stable coins to local fiat to another local fiat as easy as I go from a checking account to a savings account on my US bank app.
Yeah, and I think a contributing factor to that is we need to abstract a lot of the underlying complexity and nuance, away to make it more of a utility for the last mile, right? Like we are trying to link up as many financial systems together and using stablecoins as, like I mentioned earlier, an interoperability layer. But I think it's particularly important for projects like Eco in the protocol to be able to better kind of remove some of the user experience complexities and a lot of the nuance behind crypto. I mean, it's still hard, and your layman still struggles with understanding a lot of these underlying kind of complexities, and they don't need to understand it. If they do and they're curious and want to learn, that's amazing. But the real power is the utility here and abstracting the complexity away. And we're trying to make it as easy and seamless across the board.
Yeah, if I can take this to show you how it looks practically. We have companies today in Africa, they have an invoice in China. They upload their invoice, right? There's a little information on the Chinese supplier. They give us local African fiat currency. We credit them stable coins. Then at their instructions, we liquidate the stable coins and pay a supplier in Hong Kong or Beijing or Singapore in the currency they need there. We tell them they know that this is a stable coin transaction, but what they really care about is that the supplier got paid at a low cost quickly.
That makes total sense. Thank you. Thank you for that. Great. Awesome. Cool. The last thing I kind of wanted to touch on, you guys just released an ebook on crypto payment APIs. I had a chance to read the majority of it. I thought it was super interesting, but I just wondered if you wanted to talk about that a little bit and why you're focusing on crypto payment APIs, what you think they unlock, and why that's such an important part of your growth strategy in Africa.
Yeah, I think it's kind of related to your last question about the last mile. We want it to be a growing ecosystem, right? We want fintechs and companies across the globe to be able to confidently and safely enter the African market, or African companies be able to enter the more global market without all of the kind of underlying kind of baggage, And so really we think that API driven payments and the facilitation of payment routing is really key. And our payments API is really trying to abstract a lot of the pain and complexity away so that it's easy for these companies to be able to operate in other regions in the world. And I think that API driven payments is definitely going to continue to be a bigger and bigger thing. And so for us, we want to be on the ground actually facilitating these end payments for as many companies as possible, so that there's more competition, more financial instrumentation available. It's just going to help essentially the kind of global economy by removing some of these barriers and borders.
Awesome. Thank you. Cool. Just a couple minutes over. I think we can wrap things up. Before we do, I want to thank Jason and Justin for joining today. This was awesome. Jason, you mentioned getting more, African voices on these calls like these. Anytime, if you have someone that you'd like to get on, I will get up at any point, at any time of the day or night, and always host. I would absolutely love that. So that is 100% on the table anytime. So thank you for that. Before we go, is there anything else that you would like everyone to know about Yellow Card or what's coming up next before we say goodbye?
I would say that, we've talked a lot about Africa, and that's where we started, and that's where most of our team is. But we're rapidly expanding our technology across the developing world. Within months, our APIs will connect people to Southeast Asia and India, Latin America, and other parts of the emerging world where we're focused and where the inefficiencies can be greatest. And the tech is there. Kind of developed an expertise in doing hard things in hard places. And we've been leading stables for a long time, and it's kind of nice to see the regulators in the market kind of seeing what we've been seeing from our customers for a while. Thanks for having us.
For sure. Doing the hard thing pays off in the long term, right?
Absolutely.
Also, you guys are gonna bank some serious air miles. Listen, thank you so much for joining. I'll call it here. Appreciate your time, and we'll talk soon. Everybody have a fantastic rest of the week.
Thanks, Dave, and thanks to the Eco Foundation for putting this together. Thanks everybody for attending and listening. Y'all have a great weekend.
You as well.
Cheers.